We do have a question that came in, Neil, a tax question. A client wants to know how can one manage taxes on investment income such as dividends and interest?
Yeah, with difficulty. The issue with investment income is that most of the time it's out of your control. You are you own some stock and they decide to issue a dividend and your 0.00000 whatever percentage voting share, you're not going to have any real effect on that decision. You're either going to get the dividend or not. And what you do with that dividend is some people reinvest it, some people take the cash, most people reinvest it. And it's you're just stuck with it. If the numbers are large enough, then there becomes strategies as far as how you want to hold that investment. Do you want to hold it in your personal name? Do you want to hold it in some kind of entity? So there's that aspect. And then if the numbers get really big, then there are, capital gains strategies. There are trusts you can set up to do different things. But that's way on the extreme. That is not a common thing that we see. So I was working on somebody's return earlier today. They had $800 worth of interest and 2 grand worth of dividends, and that's just you're just stuck with it essentially. But if it's interest or dividends from an entity you control, not some third party Wall Street thing, then there are options as far as how do you want to structure this income. Should it be a dividend? Should it be interest? Should it be a loan? Should it be a reimbursement? Should it be this, that, the other? Then we can start to ask those kinds of questions and figure out what the optimal path is. But if it's just stock that you own on the stock market, you're just stuck. Or if you have interest from a bank account or a CD or something, then yeah, it just is whatever it's going to be for the most
Mhm,
part. Now,
mhm.
outside of that, I will say there are strategies that will affect your global income that are not necessarily related to those categories specifically, and then those categories will move along with everything else. If that makes sense. So let's say somebody has when all the jobs and the income or the interest and the dividends and the capital gain, everything added together comes out to pick a number $300,000. If we take that from 300 down to 250, the whole tax picture is getting smaller. And so the even though the interest and dividend is not affected directly, the ending result is reduced. So you can think about it that way. Because really what you're taxed on is your adjusted gross income. So after everything's added together and all adjustments are made, then where are you? And that's the number to target as far as what kind of tax picture you're looking at.
Understood.
And let's do one more.